It never feels like the end while it is happening. It feels ordinary. Meetings continue. Markets open in the morning. Headlines cycle. People make plans for next month as if the ground beneath those plans were fixed. Before every fall, something subtle becomes normal. History rarely announces a turning point in advance. What it offers instead is a gradual shift in tolerance. Behaviors that once felt temporary begin to feel routine. Strains that once sparked concern become accepted as background conditions. The system does not appear broken. It appears busy, functional, slightly stressed, perhaps, but still standing. This is how transitions hide in plain sight. They embed themselves in daily life. A delayed response becomes expected. A weaker outcome becomes standard. A compromise becomes policy. Each adjustment seems small, even rational, but together they alter the structure beneath collective confidence. The pattern repeats across centuries. Expansion builds belief. Belief supports risk. Risk stretches capacity. Capacity thins quietly. Yet the rituals remain. Institutions preserve their language. Leaders speak of stability. Reports highlight resilience. The surface remains smooth long enough for people to assume it always will be. What changes first is not the visible structure, but the invisible agreement that holds it together. Trust begins to shift from assumption to calculation. People start measuring what they once took for granted. They hedge their expectations. They lower their standards slightly, then slightly again. The system adapts, but each adaptation costs something intangible. History doesn't repeat itself, but it rhymes. The rhyme is not found in dramatic collapse, but in normalization. Before every fall, instability is absorbed into routine. Before every unraveling, strain becomes part of the design. Collective behavior plays a central role in this phase. Individuals respond to incentives in front of them. They protect their roles. They protect their reputations. They assume that if something were truly wrong, someone higher in the structure would intervene. Responsibility diffuses upward, even as authority weakens. The most dangerous moment is not crisis. It is comfort. It is the period when systems continue operating well enough to discourage deeper examination. Output continues. Signals remain mixed. Optimism and doubt coexist. The appearance of continuity overrides the reality of erosion. Over time, what once felt exceptional becomes expected. What once demanded correction becomes categorized as a cycle. Language shifts to accommodate decline without naming it. Stability is redefined in quieter terms. By the time the fall becomes visible, the normalization has already done its work. The ground did not suddenly give way. It softened gradually until weight itself became unsustainable. This documentary is about that softening, about the slow redefinition of normal that precedes structural change, about the phases that feel manageable, even logical, while they quietly prepare the conditions for something larger. Because before every fall, nothing seems urgent, nothing seems final. Everything simply feels like the way things are now. And that feeling, more than any dramatic event, is where the pattern begins. Long before the final rupture, the shift toward fragility can be traced in records that no one reads twice. In Rome, as territorial expansion slowed and military victories became harder to sustain, the state quietly adjusted its currency. Silver content was reduced gradually, almost invisibly, while public spectacles grew more elaborate. The surface shimmered. Beneath it, trust thinned. Centuries later, in imperial Spain, ships heavy with silver from the New World created the illusion of endless wealth. Prices rose, debts accumulated, and productivity weakened. The metal kept arriving, and so did the reassurance that prosperity was secure. Inflation did not announce itself as a threat. It felt like activity, movement, growth. The distortion embedded itself so deeply into daily transactions that few could separate abundance from imbalance. The same pattern surfaced in financial centers during the late stages of industrial expansion. Railways multiplied beyond demand. Credit expanded faster than output. Institutions praise innovation while ignoring leverage ratios climbing in the background. Newspapers celebrated scale and speed. The vocabulary of progress replaced the language of caution. What was extraordinary only a decade earlier became routine. The shift was psychological before it was economic. In the final years of certain dynasties, bureaucracies grew thicker even as authority weakened. Layers of administration expanded to manage complexity, but complexity itself became unmanageable. Reports multiplied. Meetings lengthened. Confidence, however, was preserved in public. No ruler declared uncertainty. No official circular admitted fragility. The system continued to function, and that functionality masked deterioration. Financial crises in the modern era follow similar rhythms. Asset prices inflate not in isolation, but within a narrative that justifies them. New instruments appear to distribute risk more efficiently. Regulators speak of resilience. Analysts describe volatility as healthy correction. The abnormal integrates itself into expectations. Leverage becomes strategic. Debt becomes optimized. Risk becomes sophisticated. Collective blindness is rarely malicious. It is adaptive. When an entire structure depends on confidence, doubt feels irresponsible. Questioning momentum appears disloyal to progress. Individuals within institutions often recognize minor inconsistencies, but they interpret them as temporary. Adjustments are assumed. Corrections are expected. Stability is projected forward because the alternative feels implausible. History doesn't repeat itself, but it rhymes. Across centuries and continents, before every contraction there is a period of normalization. The signals do not vanish. They are reframed. Imbalances are renamed as innovations. Delays are described as strategic patience. Structural strain is interpreted as growing complexity. And because daily life continues, because markets open each morning and administrations issue statements on schedule, the deeper transition remains invisible to most. The absence of immediate collapse reinforces belief in permanence. The longer stability appears to hold, the stronger the conviction that it will. If these patterns feel familiar, you might want to stay with this channel. This is where we examine how cycles quietly unfold beneath ordinary events. The most fragile phase of any system rarely feels dramatic. It feels procedural. Inside institutions, erosion does not arrive as chaos. It arrives as meetings that run slightly longer than they used to, as reports that require one more layer of approval, as language that grows more cautious, more technical, more distant from reality. The structure still stands. The routines still function. But the distance between surface performance and internal condition begins to widen. Trust is the invisible infrastructure holding complex systems together. It allows currency to circulate, contracts to be honored, and policies to be accepted without constant enforcement. When trust weakens, the decline is subtle. People comply outwardly while privately adjusting behavior. Investors demand marginally higher returns. Citizens grow selectively attentive. Employees follow directives but disengage emotionally. Nothing collapses immediately. The structure compensates. Institutional inertia intensifies during this phase. Large systems are designed to resist volatility. Their size creates stability in normal times. That same size slows adaptation when conditions change. Warnings are filtered through committees. Concerns are translated into technical reviews. Urgency dissolves into procedure. Each actor believes adjustment is underway somewhere else in the structure. Within financial frameworks, risk accumulation often hides inside complexity. Instruments become layered. Obligations intertwine. Accountability diffuses. No single participant sees the full architecture. Each unit manages its portion according to established metrics. As long as those metrics remain within acceptable ranges, escalation feels unnecessary. The whole appears stable because its fragments report stability. Psychologically, individuals inside these systems experience gradual normalization. When deviations occur slowly, perception recalibrates. What once triggered alarm becomes manageable. What once felt excessive becomes strategic. Adaptation is not conscious denial, it is cognitive adjustment. Humans anchor to recent experience. If instability persists without immediate breakdown, it begins to feel like equilibrium. Communication patterns also shift. Public statements emphasize resilience. Internal discussions emphasize contingencies. The gap between public assurance and private caution widens. Yet even those aware of the tension often assume that corrective forces will activate before true disruption. There is faith not in perfection, but in delay. The belief that there is still time. Time becomes the central illusion. Because decline unfolds across phases, each phase appears survivable. Minor contractions are absorbed. Policy adjustments are implemented. Liquidity is injected. Regulations are amended. Each intervention reinforces a belief that the system remains fundamentally intact. And for a while, it does. But structural transitions do not announce thresholds clearly. The moment when adaptation becomes exhaustion is difficult to detect from within. By the time trust shifts collectively rather than individually, the underlying fragility has already matured. History doesn't repeat itself, but it rhymes. Inside every large structure approaching its limit, there's a period when participants sense strain, yet continue performing their roles. They rely on precedent. They defer to authority. They assume continuity. The system does not fail because people ignore it entirely. It falters because they adjust to it, step by step, until the abnormal becomes standard operating procedure. In modern systems, the pattern rarely announces itself with spectacle. It unfolds in plain sight, wrapped in data, headlines, and routine explanations. Markets fluctuate within wider bands than before. Governments expand emergency authorities that never fully retract. Corporations revise projections downward while reaffirming long-term confidence. None of it feels extraordinary. Each shift is contextualized, rationalized, absorbed. Economic structures illustrate this rhythm clearly. When debt levels rise, they are described as manageable relative to growth. When growth slows, stimulus fills the gap. When stimulus lingers, it becomes embedded in expectation. Investors recalibrate models. Analysts adjust baselines. The extraordinary becomes incorporated into forecasts. What once required justification becomes policy tradition. Public discourse mirrors this adaptation. Language grows more technical, less moral. Structural strain is reframed as complexity. Volatility is reframed as opportunity. Institutional missteps are reframed as learning phases. The vocabulary softens perception. As long as systems continue operating, transactions clearing, salaries paid, infrastructure functioning, the deeper trajectory feels abstract. Collective behavior follows incentives, not headlines. If participation remains rewarded, most actors continue participating. If markets offer returns despite instability, capital remains engaged. If institutions continue providing services, compliance persists. Stability is measured not by underlying health, but by continuity of experience. There are moments when discomfort surfaces, a sudden correction, a policy reversal, a corporate failure. For a brief period, attention sharpens. Commentary intensifies. Questions circulate. Then stabilization mechanisms activate. Liquidity is provided. Mergers consolidate losses. Regulations are adjusted. The visible disruption fades. Relief sets in. The narrative shifts from vulnerability to resilience. Each recovery reinforces confidence in the structure's durability. Each avoided collapse becomes evidence that collapse was never imminent. Over time, this repeated avoidance builds psychological insulation. The system appears capable of absorbing unlimited strain. Memory of past fragility weakens. New participants enter without direct experience of prior breakdowns. For them, the current configuration feels normal. Yet normalization does not eliminate accumulation. Structural imbalances continue to layer quietly. Interdependencies tighten. Optionality narrows. When flexibility decreases, systems become more sensitive to pressure. But because sensitivity grows gradually, detection remains difficult. Modern networks amplify speed without increasing awareness. Information travels instantly. Reactions cascade quickly. But interpretation remains fragmented. Individuals see data points, not total architecture. Institutions monitor indicators, not collective psychology. When transitions accelerate, they often surprise those inside the structure most of all. What makes this phase unsettling is its ordinariness. Streets remain busy. Screens remain active. Institutions hold press conferences. The machinery of daily life hums. There is no singular moment marking the shift from strength to fragility. There is only a slow recalibration of expectations. History doesn't repeat itself, but it rhymes. Before every systemic fall, there's a period when adaptation looks like stability, when expanding risk looks like innovation, when institutional strain looks like complexity. And because life continues without interruption, the deeper transition remains almost invisible. Before every fall, what changes first is not the structure, it is perception. The visible architecture often stands firm until the very end. Institutions continue operating. Leaders continue speaking. Markets continue trading. Contracts are honored. Public rituals proceed. From the outside, continuity suggests resilience. From the inside, however, subtle shifts have already taken place. Trust thins before structures break. Not dramatically, not all at once. It erodes in small recalculations. People rely slightly more on personal networks than on formal systems. They hedge quietly against outcomes they do not voice publicly. They adjust expectations downward just a little. The collective mood becomes cautious without ever declaring itself afraid. These adjustments feel prudent, even rational. No single decision appears decisive. Each action is defensible, but taken together, they alter the character of the system. Cooperation becomes more conditional. Optimism becomes more performative. Participation becomes more transactional. At this stage, decline does not resemble collapse. It resembles normalization. Conversations that once felt unthinkable become routine. Metrics that once signaled distress become reclassified as manageable. Structural fragility becomes a topic for panels and reports rather than urgent reform. The extraordinary integrates into the ordinary. History shows this rhythm repeatedly. Complex systems rarely disintegrate at their weakest point. They unravel after prolonged adaptation to strain. The process is gradual enough to preserve plausibility. There's always an explanation for why stability remains intact. There's always evidence that continuity will extend further, and often it does for a time. The final phase is less about shock and more about recognition. What once seemed sustainable reveals itself as stretched. What once seemed temporary reveals itself as embedded. What once seemed reversible reveals itself as structural. Yet even then, there is no dramatic soundtrack, no universal signal, only a series of realizations unfolding at different speeds across society. Some recognize the transition early, but cannot articulate it clearly. Others sense discomfort, but attribute it to isolated factors. Many continue forward, anchored by routine. Collective behavior rarely shifts until evidence becomes undeniable. By then, flexibility has already narrowed. History doesn't repeat itself, but it rhymes. The rhyme lies in the pattern of normalization. In the quiet way, instability becomes integrated into expectation. In the gradual lowering of standards that once defined strength. In the subtle redefinition of what functioning means. Before every fall, nothing looks like falling. Life continues. Systems operate. Confidence circulates. And beneath the surface, the transition completes itself. Not with a sudden crash, but with a quiet acceptance that what once felt solid has already changed. That is the phase history remembers most clearly. Not the moment of impact, but the long period when it all felt normal.